Hi, everyone. Good afternoon. My name is Andrew Ling, and I'm the Senior Marketing Manager here at MNP. Welcome to our webinar, and we're glad to have you all here. Thanks to UBC Dentistry alumni for helping us to put this on. It's great to see so many of you here today as well. Just some housekeeping items really quickly. We do have a chat section at the bottom right-hand of your window for those of you who are using a computer. For any questions that you might have, please post them in there, and we will have a couple of us in the background that will be looking that over, and we'll try to get as many questions as possible. We'll push them over back into the public chat after we've had a chance to look at them, so as to be able to make sure that there's enough time to answer as many of these questions as possible. If it's a little bit too specific, that's where Mike and Marty will be able to reach back out to you, or feel free to reach back out to them later as well. Their contact information will be on a couple of the slides later on in the presentation. So as mentioned, if there's anything else going on as far as your web browser, please make sure that you have Chrome or Firefox. If you're listening to me, then it's all good. So without any further ado, I'm going to introduce Mike and Marty. So Mike Anderson is a partner with MMP's Assurance Services group in South Surrey, and he is the regional leader of MMP's Professionals Group, specializing in medical professionals. Likewise, Marty Clement is a partner in MNP Kelowna's office, and he also has experience providing tax advice to partnerships, trusts, corporations, and healthcare professionals. So with that, I will hand over the camera feed and the mic to take it on. Mike, there you go. Thank you.
Right on. Thanks, Andrew. And yeah, welcome everyone. And thank you to Rosemary and Jane for helping pull this all off and get everyone online today. So so we're going to chat about just some of the government measures sort of around supporting businesses related to COVID-19. Just quickly, a little bit about MMP if you're not familiar with us. We're a national accounting, tax, business advisory firm located across Canada. We've got about 70 offices across the country, most major urban centers, and we're in a lot of the rural centers throughout the country as well. In terms of an agenda today, we'll maybe just sort of a bit of sort of set the backdrop. So a lot of these programs just generate obviously out of cash flow impacts on your practices. So we'll just have a quick chat on that. We'll talk a little bit about some of the initiatives around tax filing deadlines, payment deadlines that the federal government has announced. We'll talk a little bit about the two wage subsidy programs. We'll sort of quickly touch on the temporary wage subsidy, but I think the meatier one, which will take up the bulk of our time today, Marty will take us through the Canadian Emergency Wage Subsidy, or CEWS as we're calling it for short. And then we'll also talk about the Canada Emergency Response Benefit, or CERB for short, which is the EI program. Not on the agenda, we're also going to talk about the $40,000 loan account that I suspect most are familiar with. So a little bit of a legal disclaimer that no presentation is complete without. So just in terms of cash flow impacts on your practices, I think the reality is probably most people on the line here have been shut down for a few weeks now, and have probably taken a lot of steps to alleviate some of your variable costs. So obviously your labor, your supplies, and so forth. But you got some costs that continue on, which we would normally call fixed costs. So those maybe something like your debt service, so the equipment you bought for your practice, or maybe your practice expenses. And if you haven't already, great idea to be reaching out to your creditors to see. Most have been fairly amenable to allowing you to defer some of your loan payments. Rent's another big one. There's some landlords out there that have been willing to work with their tenants on deferring some of their rent payments. If you haven't heard today, still a little scarce on details, but the federal government actually announced today a program where they're going to subsidize the rent for qualifying small businesses. So there's still some more details to come on that are apparently going to be fleshed out over the next few days here. But that's some potentially some great news for everyone on the line here, that there could be some more help on the way. And of course, that's sort of on the heels of the good news around the pandemic insurance claims that I think most of you received over the last week. So, sort of looking forward, the there's a lot of talk, and the narrative seems to be shifting towards how do we reopen our economy here in BC in particular. And I know there's been some talk around which businesses are going to be first out of the gate when it comes time to reopen. And dental practices have been sort of front and center in terms of one of the businesses that might be first to reopen. So, if you haven't already done so, now is a great time to be thinking about what do the cash flows look like for those first few days or months when you're reopening your business. I think the reality is that most practices will probably be a little bit slower to get off the ground and up and running again. You're going to have to rehire your employees, and they're going to want paychecks. Maybe before you got the revenues coming in the door. You maybe take inventory of your supplies and your protective equipment and so forth. Do you need to restock on things? Is there any capital infrastructure that you need to invest in? To get your practice up and running, if some of the safety requirements around operating a dental practice change. So you want to be thinking about this stuff and, be proactive. You might reach out to your bank and see if there's room on to increase your operating line, or, a lot of businesses will have pre-approved equipment lines, where you can acquire capital equipment, and it's all pre-authorized so that when you do acquire something, you just dip into the line. So, and then of course we'll talk about some of the other things that'll help you with cash flow as we move through this presentation. So in terms of tax filing deadlines, really most of you are aware of these. Personal taxes, of course, they would normally be due on April 30th. The government did give us an extension to June 1st to file your personal tax return without incurring any penalties. If you are unincorporated or self-employed, your return has always been due June 15th, and that hasn't changed, so it's still due June 15th. For your corporate year ends, there's really no changes unless you've got a year end that is either a September or October year end. Those would be normally due in March and April correspondingly. Those have actually been extended out to June 1st. So you got a little bit of time if you got a September, October year end to get your returns filed. Many of you likely have family trusts, which would be a T3 return. Those are normally due on March 30th. We've got till next Friday an extension to file those without incurring any penalties. The rest of these programs here, probably aren't applicable to most people on the line, so we'll skip over them. In terms of payment due dates, this is going to be something that'll help a lot of you just managing your cash flows. So federally, the government is allowing businesses and individuals to defer any tax payments that become owing after March 18th, 2020. So, think about, the payment when your accountant tells you you have a balance due, or the monthly corporate installments or the quarterly personal installments that you would make throughout the year. So anything that's due after that March 18th date, you can actually defer those out to September 1st. Your corporate installments, you do need to make sure you're caught up to February 28th because interest will accrue on anything that has been paid up to that point in time. Personally, the last installment that would have been payable would have been March 15th, so you need to make sure that was paid. But anything after that date, the next one would be June 15th. You can actually push that out to September. Then the other piece around this would be when it comes to installments, the requirement to send installments is based on the lesser of what you owed last year and what you're going to owe this year. So the reality is your revenues are down, likely your profits are down. If you look how you did this year compared to next year, there's a very good chance that this year won't look as good as last year, which means you likely won't owe as much tax this year. So not a bad idea, come August, middle August, late August, before you send that September 1st personal or corporate installment in, touch base with your tax advisors and just, take a look at how the year has been looking, and, perhaps you can even reduce the payments that you've deferred out to September 1st. Just quickly, payroll GST, payroll remittances, if you do still have employees or you're paying yourself still, there's been no changes to payroll remittances, so those are still due and payable on their ordinary dates that you're required to make your payroll remittances. If you are registered for GST, you should still file your returns, but the government's giving you to June 30th to actually pay the balance owing, and again, that's without interest and penalties. If you got GST refunds coming back to you, definitely make sure you get those filed, and the government will refund back any refunds. So temporary wage subsidy, basically this program, this was one of the first programs the government rolled out to help employees basically reduce the amount of payroll remittances they were sending in for their payroll. And it's a 3-month measure that basically runs on the time frame of March 18th to June 19th. To qualify, you do need to employ at least one individual who's working in Canada, which is probably likely the case if you still have employees. One of the keys is you do have to have an existing business number and a payroll account. That last one is kind of key because a lot of businesses, in particular, if you're an associate, you may be paying yourself dividends if you're incorporated, and you may not have a payroll number set up at March 18th. So if you don't have a payroll number set up, you're not going to qualify, unfortunately, for this program. But if you do, the program, the doors do open. So in terms of what qualifies, it's any salary, wages, bonuses, other remuneration that you might pay. What it doesn't include, more importantly, is if you do pay yourself dividends, those won't qualify for the subsidy. In terms of eligibility, really the key is number one, you need to be a Canadian-controlled private corporation. And then number two is your business or company had to have been allocated some of the small business deduction or allocated the small business deduction for its last fiscal period. So, if you think of an example, if you have 2 or 3 companies, maybe you got 3 practices and those practices are sharing a small business deduction. If one of those practices claimed all the small business deduction, the other 2 companies won't qualify for this program. The one that claimed it will, but if you shared that small business deduction around the 3 practices or 3 companies, each of the 3 companies will actually qualify for the program. So in terms of how this works, basically what the government will do is they'll give you a subsidy equal to 10% of the remuneration you pay during the qualifying period. The maximum amount you can claim per employee is $1,375, and the maximum for an employer across all the employees to make the claim for would be $25,000. And again, if you have multiple companies in a group that qualify and you max out $25,000 in each of the companies, you can actually access sort of the multiple subsidies. If you're a larger group of practices, there is a rule that if your taxable capital for the group of your companies is above 15 million, and just kind of it's a bit of a complicated calculation, but just kind of as a rough guideline, it would be more or less the retained earnings you have in your practice plus any debt that you have in your practice. There's a few adjustments, but that's kind of a general guideline. If you are claiming the subsidy, you can't reduce the CPP or EI that you're withholding. You still got to base that on your regular wages. And I guess the last point here would be, if you are claiming the subsidy, just be aware that that is taxable to the corporation when it eventually comes back to you. So I'm going to turn it over now to Marty, who will take us through the bigger of the 2 subsidies, the Qs.
Well, thanks very much, Mike. So we'll probably spend about 10 or 15 minutes talking about this program. And this program is, I'd say of high interest for the owner-manager and possibly their family members. But there's lots of questions about utilizing this program and potentially bringing staff back to work, but maybe on a paid leave. So we'll get right into it. So just a bit of background about the program. So this is a 75% wage subsidy program, and it's been provided by the government, and it goes back to March 15th, 2020. And really what the government's trying to do here is that they're trying to, subsidize workers or businesses so that, their people are being rehired, which there's lots of talk about that right now. It potentially prevents layoffs. And ultimately what they're trying to do is kind of keep the workforce warm so that when things recover, things bounce back a little bit better and we don't have just such a cold start. So the way that this operates is we're looking at, a 75% wage subsidy on the first $58,700 that's normally earned by the employees. And so the $58,700 coincidentally is the sort of earnings that you sort of max out for CPP purposes. And really what that represents is about $847 a week. So as it stands now, the program's in place from March 15th to June 6th, and it covers 3 periods, which we'll talk about. But in the legislation, there's a bit of a sunset clause in here, and that, depending how things sort of go in the future, the government does have the ability to extend this program out to September 30th. So that's really to be seen. But anyways, the flexibility does exist in the legislation. So when we think about the wage subsidy program, there's 6 boxes that we kind of have to check here in terms of, look, can we get into this or not? And so we're going to touch on, 4 of these things fairly briefly, but we're going to spend most of our time on what I call the bigger hurdles. And the bigger hurdles are the qualifying revenue. And so, look, we got to test our revenues to get into this. And then, the other big piece of this where there's some complexity and you just want to make sure you get it right is in the context of eligible remuneration. So we'll spend most of our time just sort of talking about revenues and remuneration. So an eligible employee, okay, just as a starting point, and again, this is one of the easier concepts here, is an individual who's employed in Canada by an eligible entity. So I would assume that an eligible entity would be your dental professional corporation that, was employing staff. But the key thing with the eligible employee is that it's other than someone who has not been remunerated for 14 consecutive days in an eligible period. So just keep in mind there that, look, if you are thinking about bringing people back to work and subsidizing their wage, you really need to make sure that, nobody goes without 14 consecutive days within one of these eligible periods without remuneration. So last week, you may have heard that the government has sort of signaled that you might be able to, back pay or rehire people and get them into the wage subsidy program. So just anyways, we're still learning about this as we go, but it looks like there's, some flexibility here in terms of, making sure that, we don't run afoul of, having an employee in a situation where they don't meet this criteria, you subsidize them and you don't get the money from the government. So an eligible entity is, here's a bit of a laundry list about all the entities that are sort of eligible for this program. And kind of, as I had mentioned, if you've got a dental professional corporation, I think, there's a pretty good bet that you're going to check that box. So the qualifying periods, and this table accomplishes a couple of things. And so I'd sort of mentioned that, look, the program runs from, March 15th out to June 6th. And what they've done is they've broken it out into 3 periods. Each period represents about 4 weeks. Okay, so when you're looking at the table or you're considering this, okay, so the wages where you can claim the subsidy, that relates to your claiming period. Okay, so for instance, if you're going to be looking at getting a wage subsidy for wages that were paid between March 15th to April 11th, and that's, kind of happened. What ends up happening is you have to look at the reference period in terms of your revenues to be able to test as to whether or not you can claim the wage subsidy for that period. So, for the claiming period of March 15th to April 11th, you're going to test your March revenues. Okay, and when you're looking at testing your March revenues, you're going to take your March 2020 revenues, and maybe as a starting point, using your regular accounting practices, you're going to test that to March 2019, and you're looking for a reduction of at least 15%, okay? Now, they've opened up the program, and if that doesn't work because you were on March break last year or not working for whatever reason, look, it's not over. You can look at the average revenues between January and February and compare that to March 2020. And look, if that doesn't work with your normal accounting methods or metrics, you can utilize the cash basis of accounting, which we'll talk about in a couple of slides. So, the one thing that, maybe to be mindful of here is that, look, if you get in for March, you're deemed to be in for April, which would be certainly helpful. Same thing, if you're April, you're deemed to be in for May. So a couple of things that are kind of helpful there in terms of, qualifying yourself with, clearing this bigger bar, which is the revenue test. So just a couple of generalities here. In terms of the general rule, you're going to be looking at this on an entity by entity basis. And when you're kind of following your normal accounting practices, for March anyways, you're going to want to exclude extraordinary items. If you have claimed the 10% program, which is the TWS, just like Mike talked about, you don't count that. If you get into the Canadian Emerge Wage Subsidy program here, and that money comes back into you, that's not revenue for this these purposes either. Now, in terms of extraordinary items, I think, one of the hot topics right now is maybe the pandemic payout that, looks like it's going to be happening here in British Columbia. And how does that, affect the revenue test? So, I think my view is that maybe as a starting point, a pandemic payout is probably an extraordinary item. So, a lot of things have to happen for that to happen, which are certainly not normal. So I think that's certainly a sensible way to approach it. For whatever reason, if you're not comfortable with that or you're looking through your agreement, I'd made mention of, like, look, you can test your revenues based on the normal way you would account for them, or on a cash basis. And so we're almost at the end of April. Nobody had received in BC anyways the pandemic proceeds. So maybe what you would do is look to test your revenues on a cash basis if you're at all worried about this. So there's definitely a couple of ways to manage that situation, so it in fact doesn't throw you out of the program. So just a couple of things in your revenue, so if you're looking at March, and if you end up using January and February as an average, you've got to use January and February as kind of your baseline when you're using April and May. So once you select one way into the program, you can't just sort of pick and choose as to whatever's going to work best for you to qualify in different periods. So once you pick one, you got to be consistent with it. Look, if you're an associate dentist, or you've recently incorporated your practice, and for whatever reason you don't have a comparator for last March when you're going to do this, there's some flexibility in here that says, look, we get it, the business wasn't around, it's a startup or whatever reason. So you're going to look at your average for January and February to potentially get into the program. So some help there. Again, just on this particular slide, we've talked about revenues being down 15% in March, 30% in April, and 30% in May. The legislation kind of reads backwards on this. Just maybe one technical point before I move on is that, look, you can't necessarily round down on the slide or round up. I mean, in terms of the way that the CRA is speaking about it, it's a little bit different than a slide. Like, say you test your revenues and you're 14.7, like, you can't round up to 15 to get in. The legislation sort of reads a little bit differently. So, a bit of minutia there, but if you're, at all there or concerned about that for the month of March, just beware of, that particular rule. I had sort of made mention that if you're, going to break away from your regular accounting methods and you decide to follow the cash basis, and when I talk about the cash basis, it's, you grab your bank statement for the month of March, 2020, add it up, check the revenues only, okay, and you would compare that similarly to prior March, or the average of January and February. Look, if you're electing to use cash at the onset to get into the program, you've got to follow suit and use cash, right through, the same way that once you pick your comparator benchmark being last March or the average of January and February, you've got to stick with that too. So you can use a combination of it, but you can't necessarily make it up as you go along once you've committed at the onset. So just a bit of an example here on this particular slide. So in March 2020, let's assume that our revenues are $130,000 there. Okay, so we go, okay, well, what do we do here? So we look at our baseline, and so our baseline for March of 2019 is 120,000. So there's no reduction because our revenues are in fact up in this example. So we'd say, okay, well, we don't get into the test here, so what do we do now? So again, we'd say, well, March of 2020 was 130,000. We look at the average for January and February. That average is at 170. We've got a 23.3% reduction, so it looks like we're in, which is great. So just a couple of things to reinforce here. Since we've relied on the January and February average, we're going to have to do so for April and May, so that shouldn't be a big deal. And sort of, away we go. Now, look, if we looked at January and February, okay, and we didn't get in, then the next step would be to test this with cash using the bank statements, just as I had mentioned. And if you're in the cash method of doing this, then you're going to have to stick through that throughout the program. So we're just changing gears, so away from the revenues and then into the other important component here, which is eligible remuneration. So again, the wage subsidy program is it doesn't replace employment contracts or anything, but it's a program that helps you sort of discharge the obligations under those. So what it includes here is salaries and wages that you would normally pay, and it's got to be paid in respect of a week in the qualifying period. So the qualifying period, as we know it, is March 15th to June 6th right now. Okay. It doesn't include dividends, okay? It doesn't include severance pay if that's, something that's happened. Again, this is something to keep people on payroll, not to subsidize sort of the dismissal of employees. Stock options wouldn't be included. It wouldn't necessarily be all that relevant to the dental community. And again, we talked about this, the last bullet at the onset. And again, remuneration paid to employees who is without remuneration by the employer in respect of 14 or more consecutive days. So again, if you're in that boat of thinking about rehiring people, it's really important to make sure that if you're going to rehire them and you're going to pay them, you need to make sure that, that test is met, so you're not paying the employee and not getting the subsidy on the back end. But again, it seems to me like there's definitely some flexibility in terms of, maybe back paying employees to get into this. But again, that's something you're going to want to work through very carefully if, that's a path that you're sort of entertaining to go down. So again, just a couple of things that it doesn't include, and this is probably more in the context of, the dental practice owner, okay? So it doesn't include any money that the wages that the dental practice owner would take and immediately relend back to the entity. So if you're doing that for whatever reason, that won't be subsidized. Maybe if you're taking, you're remitting the payroll taxes but not taking the salary, and you're using what's owed to you to offset monies you'd previously taken out of the practice, that won't be subsidized, okay? And then again, if you've decided, maybe to give yourself a raise because things are being subsidized, that won't qualify. And, if it's reasonable to expect a real decline in your salary post June 6th, again, those sort of things might be out. So what they're trying to do is, sort of fund a consistent payroll that's been consistent in the past. Just a quick rule here on what's called doubling up. For whatever reason, and it does happen, if you've got an employee that's employed in one or more of your entities in your corporate group, the expectation there is that you're going to select one entity and claim the wage subsidy one time. Now, if you've got an employee that's working for you and at night, you're not really sure where they're working, but it's across town for somebody, what ends up happening there is you would claim your wage subsidy, and whoever else is employing that employee, you're dealing at arm's length, they would claim the same. So you don't have to worry about figuring that out. But again, if you have one employee that's duplicated within your own system, you would only claim that one time. So just a couple of other concepts before we get into an example here is, one of the concepts that they're really looking at is baseline remuneration. And so what they're attempting to do with baseline remuneration is they're attempting to measure, somebody's average weekly remuneration from January 1st to March 15th. And they're kind of looking at that saying, well, look, that was kind of the deal before, the crisis hit in and around March 15th. And so they kind of use that as a guide in terms of what they'll subsidize going forward. So one of the exercises that you certainly have to go through with, any staff that you're potentially, going to use this program for or bring back is you're going to have to go through the exercise of figuring out what everybody's baseline remuneration was in the context of subsidizing them. So a little bit of work there, but you'll kind of see how that sort of shakes out in a minute or two here. So, just before we get into that, the subsidy is calculated technically by way of a formula. So you're going to kind of see the formula on the next slide representing variable A. Mike was talking about the 10% wage basically takes into account that, like, look, if you've claimed the 10% wage subsidy, we're going to back it out of your 75% claim here. So, you're not going to get 85%. You're going to probably get 65% with this program because you've got 10 elsewhere. In total, that's 75%. Variable C kind of pertains to work sharing arrangements, which may be difficult to gather information from your employee if you have employees that are in that. And variable D here sort of says it's an add-on. So this would increase the amount of money that would potentially come back to you. And look, as an employer, when you're paying your staff, you're funding the Canada Pension Plan, and you're funding EI. And so what they've said here is that, look, if you bring somebody back and you put them on paid leave so they're not really working, you get to reclaim the CPP and the EI. And the context there is that, look, as a business owner, you shouldn't be incurring business costs related to payroll, at least from a federal perspective, if you're going to be bringing people back. Now, depending on where you live, there's provincial considerations in terms of maybe payroll tax or workers' compensation. Largely, those have been deferred, not knocked out. So maybe you have other payroll costs to consider when you're kind of working through this. But at least from a federal perspective, there should be not really a disincentive there. So, this slide will sort of speak for itself on the following slide. But this is kind of the way that they've outlined the way that you would sort of program the calculation to figure out what the wage subsidy is for somebody. So maybe a good reference to come back to. Because I think this will be posted afterwards to sort of evaluate your own situation if you think that's helpful. So when we're looking at this table here, just a couple of things. If you look at column 1 and 2, or the first two columns with numbers in it, okay, really what's happening here is that, in an arm's length situation, so that would be somebody you're employing that's not a family member, for instance. Okay, so it looks at your weekly baseline remuneration. So that was the $2,000, and that's what we talked about when we sort of said, how much did that individual make between January 1 and March 15th? Okay, so in this case, it happens to be $2,000. Now, look, you've hired them back, okay, in this example for $800 per week. And, I'm just going to talk about the income tax realities and the cash flow realities here. But, if you're going to be hiring people back for a lot less, I think it would certainly be wise to, have a discussion with your lawyer as to whether or not that's creating other issues for you. But, that's probably for a different presentation and a different day. But just be very mindful of that. So, when you do this and you bring the person back at $800, when you run through the calculation, okay, the maximum subsidy of $800 that the government will send you, okay, is 100% subsidy of what you're in fact paying the staff. So, the idea there is that, like, look, that's maybe better than the $500 a week they might be claiming underserved. That might be better than the $573 that they're claiming on employment insurance. So if this is something you can cash flow, this is where, the conversations are happening about, rehiring staff, keeping them sort of idle but warm for, work to do, or for when the economy bounces back. Or look, some people are of the mindset that if they can financially swing it, they just want to better their staff's situation, just because that's what they want to do. And conversely, there's, maybe another school of thought out there that sort of says that, look, EI is enough, and I can't necessarily do that. So it's going to be sort of a personal decision or a business by business decision as to, probably what you end up doing there. Lastly, in column 3 and 4, I think the general message here is that what it ends up showing, it sort of shows the inverse. Okay, so if you've got an arm's length employee that was making $700 on average between January and March 15th, and now you've given them a raise. Okay, so if you're dealing at arm's length, what ends up happening when you run through the variables or the calculation, you end up getting a subsidy of $847 a week. So 71% of their pay is in fact subsidized. Okay, now look, if you do that same thing, okay, with a family member, what ends up happening here is that the calculation kind of ignores the fact that, what you're paying them today. The calculation for someone who's not at arm's length is really going to look at your baseline remuneration in terms of what you were paying them before the crisis hit. And in this particular case, what it's doing is it's saying, well, look, if you're only paying them $700 before the crisis hit, we're not going to be subsidizing a wage for someone who's not at arm's length. So just a couple of things on this point, and so we sort of mentioned that this was a component D, I think, of the formula, where again they're trying to remove the disincentive of having federal payroll costs related to this whole concept of bringing somebody back to work and paying them to be on leave. So again, that shouldn't be a cost, and so that'd be sort of the refund of the contributions. Sort of how to apply for this program. So this is opening up on Monday, so there's a lot of anticipation about that. Now, just be mindful of the fact that, yes, well, this does open on Monday. You can apply for this all the way out to September. So, look, obviously cash is really important. You want to work through these issues as fast as possible. But if you're not comfortable with where your records are at or what you're doing, maybe just pause and take a break and make sure you just take the time to get it right, before you make your claim. So just a couple of other things that are just, maybe practical in nature. So when you do make the claim, you're going to have to sign an attestation that sort of says your revenues have declined and you've met all the conditions of the program. So again, if you're making an attestation, I think the idea there is that if you're attesting to something, you probably have some working papers or a bit of support there that, sort of supports your attestation. The government wants employers to continue to pay employees as best as possible. I had a conversation with a dentist this morning. They're doing emergency procedures, and what they've decided to do, and this is just what they've decided to do within the context of their own business, is they've said, look, we're going to subsidize everybody as best as possible and flow everything through, so we don't have these costs. Now, look, because we're running emergency procedures, there needs to be some sort of incentive to get the staff, into the practice to do more work. So what they've decided to do there is that, they'll subsidize everybody. If the staff comes in, then they would pay the staff, additional money based on the fact that the business is generating revenue. So anyways, that was just, one particular situation where I thought, it's somewhat interesting just talking to the dentist and the way they're approaching it, but there'll be, lots of different ways the dental practices approach this, but I thought that was somewhat interesting. Now, lastly, if you apply for this program, the minister or the Canada Revenue Agency, really what it is they do have the ability to make this information or your application public in sort of the manner that they'd best see fit. It's a bit of a stick, I guess, that they would kind of hold over you in terms of making sure everyone's on their best behavior with this program. Again, I'm not going to get into this slide with a whole lot of detail, but what's happening here is it just sort of indicates that, look, if for whatever reason you haven't done this right or there's mistakes, the consequences of this are, you definitely have to repay the subsidy. So if you're making decisions based on, cash flow and not having a cost, you certainly want to make sure that whatever you're doing is correct, because you don't want to be having to pay a subsidy back down the road. If in fact you don't get it, that may lead to a bit of a cost, and it probably would have led to a bit of a different decision at the time. So again, really just take the time to understand that, what you're doing and making sure that it's right. And then, there's some other things that the government has out there to sort of dissuade anybody who thinks that, this is something that they would want to take advantage of. So I'm going to turn it back to Mike, who's going to talk about the CERB program and the CEBA account.
Right on. Thanks, Marty. Glad Marty's computer didn't die there and leave me hanging with that meaty section. So in terms of the CERB program, this is the employment insurance program that the government rolled out in early days. So basically, it's a temporary program that's meant to support workers who stopped working and are without employment or self-employment income for reasons related to COVID-19. And the couple key words in here are, number one, you had to have stopped working. And number two, to qualify for the program, you had to have stopped working or be without work because of COVID-19. So it can't be for other reasons outside of that. You won't qualify. So in terms of the benefit, temporary in nature, it's $500 a week or $2,000 a month. It'll carry you through for a 16-week period. If your employees qualify for EI, and likely you as dentists won't qualify for EI, but your employees might qualify for EI. They can go on to EI afterwards if this 16 weeks runs out. The benefits available, it's going to basically cover the period, any 16 weeks that fall within the March 15th to October 3rd timeframe. There's not a rush to necessarily apply for this. So, if you think this program might be more applicable to you than perhaps the wage subsidy, and you haven't made an application going back to March 15th, it's not too late to do that. You've got to December 2nd to make up your mind on that and apply. So in terms of applying, that opened up on April 6th. So we're about 20 days into the application, or 18 days into the application process. You can do it through My Account or your CRA My Account, Service Canada, 1-800 number. Feedback I'm hearing from speaking clients and people that have applied is the CRA My Account is definitely the way to go. If you haven't got that set up, it's relatively simple to set up. The website address is there that you can access after this presentation. The 1-800 number, from what I'm hearing here, might be days waiting on hold. So the online route might be the better way to go. So in terms of who's eligible, number one, you need to be a Canadian resident. And you need to be at least 15 years of age or older. And again, just to reiterate, you had to have stopped working for reasons related to COVID-19. And the other key test to this is you have to have had at least $5,000 of employment or self-employment income in 2019 or the 12 months preceding the application date. So if someone had $5,000 worth of income in January and February 2020, that would meet the requirements. Obviously, this was a bit of a roadblock. Some of you may even experience this where, perhaps you called a staff member in to help you with an emergency procedure, and you're going to pay that staff member $100 for the day, and that staff member may have told you, I'm not coming in because $100 you're going to pay me, I'm going to lose my $2,000 CERB payment. So I think the government recognized that, and they've sorry, I'm getting ahead of myself here. They've actually extended the allowable earnings under the program up to $1,000 a month while you're collecting CERB. So if your employees are still able to work a little bit under the CERB program. So in terms of, for yourselves, the common question we're getting is, what does it mean for ceasing work? And work is, it's not a definition that's defined within the Income Tax Act. you might view it as being very literal. You can't work an hour. Obviously, the government's relaxed the or hasn't relaxed the legislation. The legislation still says that you can't work for 14 days and in applicable period, but they are allowing administratively you to earn $1,000. So maybe just a couple examples. Maybe just a couple different extreme ends. Maybe you're doing the odd telephone consult. Maybe you did an emergency procedure or two during the course of the month. You're probably under the administrative provisions. You're probably fine to make a claim under the CERB. But if you're going in and doing several emergency procedures, maybe you build 5-10 grand in emergency procedures throughout the course of the month, but you kind of say, well, I can earn only $1,000. Maybe I'm going to cut my payroll back to $900 for the month. Something like that. The government, our thought is they're likely to look past their administrative policy of $1,000 a month and reference back to the legislation saying that you actually are working and we're going to deny the claim. So definitely, if the situations out there will be varied, and if you're going to make a claim and you're going to be doing a bit of work, it's definitely something you want to work through, and you'll make sure you're on side of the rules. A bit of a lag here. So my next slide's not going forward here. I don't know, Marty, if you got, nope, here we go. So the Canadian Emergency Business Account. Again, a lot of you are probably familiar with this. It's an interest-free loan that up to $40,000. Doesn't have to be $40,000, but it could be up to $40,000. And as long as it's repaid before December 31st, 2022, in full, the government will actually forgive up to 25% of the amount that you borrowed, or if you borrowed $40,000, they'll forgive $10,000 of the loan. The key to this really is the loan is meant to cover operating costs that aren't deferrable. So when we talk about that, think about payroll. Maybe you're going to hire back your employees under the wage subsidy. You've got rent expenses, utility expenses. Maybe you got bank debt relating to purchasing a practice or equipment financing, and you've got debt servicing requirements. So those are the types of things that this is meant to cover. What it's not meant to cover is paying yourself a dividend, repaying your shareholder loan account, giving yourself a raise, taking $40,000 and lumping it down on your debt relating to your practice purchase. So those are the things that you can't cover. Practically speaking, I would think that most dental practices shouldn't have an issue justifying the $40,000 loan. The individuals out there who may have a little bit more difficulty justifying it is if you're you're an incorporated associate. You probably have very lean overhead expenses. It might be difficult to justify the full $40,000 of non-deferrable expenses, but perhaps you do have some corporate expenses that aren't deferrable, and maybe you borrow a lesser amount. So that brings us to the end, and I think we will open it up to Q&A now. So I think we've had a few questions that were posted to the chat. So Marty, why don't I read you the first one, and we can take turns answering these. So the first one is the webinar posted? Yes, it will be posted. Rosemary will be able to forward a link to it afterwards. So Marty, for a practice owner incorporated receiving salary, am I eligible if I don't rehire any employees?
Yeah, so I think, so just the key thing there is that there's no connection between yourself and rehiring your employees in terms of claiming the Canadian Emergency Wage Subsidy program. But again, I think really that the important concept there is making sure that, you're not dealing at arm's length with your practice. So just making sure that you have the appropriate baseline remuneration in place before you file a claim for yourself, provided you meet the revenue requirements. So the answer is probably yes there.
Perfect. Next question: can this be used as constructive? Could this be used as a constructive dismissal claim if we only pay 75%? Do we need new agreements with employees for this? So I could take that one, Marty. Is you
okay,
definitely want, as Marty had mentioned, you definitely want to seek some legal advice around this. But I think generally speaking, if you reduce an employee's wage beyond a certain percentage in BC, anyways, you're likely to consider having constructively dismissed them. So you definitely want to, again, as Marty mentioned, to seek some legal advice, before you're rehiring someone at a reduced pay raise or pay rate.
Yeah.
Next question: if we get dividends, do we qualify for the wage subsidy? Q's. You want to take that, Marty?
Yeah, and unfortunately, there is the answer is yeah, and unfortunately, the answer there would be no. So dividends aren't going to formulate again part of that baseline remuneration. So the program is fairly narrow right now in that it's a wage subsidy. So even though you might have been compensating yourselves with a dividend, that would be sort of legally it's characterized differently, and so dividends are they're not going to be helpful, unfortunately, at this point. But I can say that the government sort of has came out with a set of rules, and just like they've done with other rules, they've been kind of bolting on changes and trying to enhance things. And there's a lot of advocacy groups in Canada that sort of see that as a real shortfall for a number of reasons. So keep your eye on it, see where it goes. So.
Right on. So the next question is this voluntary for employees or mandatory? So I could take this one here, Marty. It is voluntary, and even beyond that, you can pick and choose which employees you want to bring back under this program. So what most of our clients are doing is they're going through their list of employees, and there may be some that make sense to bring back under the program. If you have an employee who is maybe making $500 or receiving $500 a week under the CERB program, but the wage subsidy is only going to pay them $300 a week. Well, maybe that employee is better off, sticking on the CERB program. So it really becomes an employee by employee decision, and there are potentially even strategical reasons why you might bring someone back if you're worried about whether you're going to be able to retain that employee when you reopen your practice doors. So you definitely employee by employee think through it. No requirement to rehire everyone. You can pick and choose. Next question, I'll throw it to you, Marty. Is this a rehire or a paid leave?
Yeah, I think what ends up having to happen here is that, to give somebody, so if somebody's been, let go, I mean, to get them onto the wage subsidy program, they have to be an employee. So there's that concept of rehiring, and then it's like, okay, well, you rehired somebody, the business isn't open, so it's like, well, now what? So look, you can rehire them and then pay them to be on a paid leave. So under this program, there's no expectation of work that really needs to be done. It's just a matter of remuneration being paid out.
I'll fire one more here to you, Marty. So if an employer temporarily laid off an employee and the employee is now on CERB, which allows for up to $1,000 a month of income, can the employer bring back that employee and pay them under $1,000 a month so that the employee can keep the CERB and apply for the Qs? So I think the question is could you rehire someone for $750 a month and they you get the subsidy, the employee gets the $750 a month, but they get to keep their $2,000 a month?
Yeah, no, it's an interesting concept. So I think that the idea there with the CERB and the $1,000 a month is, again, just like you had said, you don't want to disincentivize people for actually doing any work, right? So the reality is that if somebody needs to get paid for a day's worth of work, they didn't want to jeopardize the full $2,000. So there is some flexibility administratively there in the context of the $1,000. Now, look, if you do pay that under regular payroll and you do claim the wage subsidy on that, they haven't really spoken to the administrative policy with $1,000 or less or not, and claiming the wage subsidy. So, I mean, that one I think is still, you're kind of relying on the CRA's administrative policy to do that. Now, I think that, let's say it didn't work, it might work, but if it didn't work, what ends up happening is that the wage subsidy sticks with the employer, but the employee is the one kind of left holding the bag, and they would have to potentially, repay the CERB. So, yeah, maybe the answer is maybe there, but I think that one just requires some more thought, I think.
Next one is, when are the deadlines to apply for CERB and the wage subsidy? So CERB is, you have to apply for that before December the 2nd, 2020. And Marty, I don't know if you know the deadline offhand. I don't know offhand for the wage subsidy.
I think it's September 30th. So, again, Monday's a really important date for a lot of people to get this, claimed. But it's not if time elapses, you just totally lose it. So there is some time to, get your wage subsidy. And so there is, I think it's September 30th.
So the next question is, if the dentist is back working and making less than $1,000 a month, can they get CERB? So I think I'd go back to sort of the example I gave is, you got to detach a little bit. What are you paying yourself from, what is your practice potentially billing? Just because you're paying yourself a month, if you're earning $10,000 of revenue in your practice, you probably have a problem claiming CERB. But if you're, just earning a little bit of revenue inside the practice, less than $1,000 a month of revenue, you would still qualify for CERB. Next question, if you already applied for CERB, can you apply for the wage subsidy and start CERB? Marty, you want to take that one?
Yeah, so if you're already on CERB and you've now decided that maybe the wage subsidy program is the route to go after working through all your facts, what would potentially end up happening there is that depending on when you're taking that salary, okay, from the wage subsidy program. Remember, when you're on CERB, you can't have income from employment or self-employment for 14 consecutive days that kind of put you onto the CERB program to begin with. So kind of what we're starting to see as we move forward and start working through real life examples here is that there might be an element of retroactive pay to make sure that you're in fact qualifying. Now with the retroactive pay, by doing that, you certainly know that you kick yourself out of the CERB program. And if you're out of the CERB program but you've already claimed it, then expect to pay back one period of CERB or whatever it might be. So if you're going to be doing things like that, I think just certainly be careful and get your own advice, I would say.
Right on. So the next one we have, and I'm going to throw this one back to you as well, Marty. With Aviva paying out pandemic insurance claims, would it be beneficial to wait to apply for the wage subsidy?
In terms of waiting, I think that a couple of things with the pandemic insurance claims. So for March, okay, you certainly didn't have that as revenue for normal accounting practices or on a cash basis. So if your revenues are good there for March, you're deemed to be in for April. We're at April 24th, and so maybe you received the pandemic insurance in May. So I don't think you necessarily have to wait for it because again, the eligibility of the program is kind of period by period. So I think that when you're making this assessment in the context of the pandemic insurance, look at it on a period by period basis, and then claim the subsidy. And then one of the things you want to think through is that whether or not that subsidy would potentially throw you out in period 3, but in period 2 you hired your employees back, and then you're footing the bill. Now again, as I mentioned in the presentation, I think there's a number of ways to potentially manage that, but again, you're just going to kind of want to work through that in the context of your own practice, just to make sure that you're not going to have a snag there or a problem. But I suspect that if you work through it, you can probably be okay there.
So the next question is I'm an incorporated associate and applied for CERB for the first 2 periods, March to May, but now I'm going to start doing emergencies in May. Can I switch to the wage subsidy? So I guess the first part would be, if you're starting to see some emergency visits in May, depending on, if it's just a couple that you're seeing, you're probably still fine on CERB. But if you're seeing several emergencies in May, you're probably going to throw yourself offside of qualifying for CERB. And then the second part of your question is, would you qualify for the wage subsidy? So going back to the qualified earnings or the baseline remuneration. What we need to do, or what you need to do, is you need to look at what you paid yourself via salary from the January to March 15th period. So if you were paying yourself salary during that period, yes, you should qualify for the wage subsidy. However, if you weren't paying yourself salary during that period, you're paying yourself dividends, you won't qualify for the wage subsidy.
Yeah, I think it's just one of those things that's fluid, right? Like you got to think about, where you're at the particular point in time. Like if you're doing nothing and you're not working, okay, well then that's the CERB program. But if you're working and you're not ceased working and you keep doing things, well, maybe the better fit is in the wage subsidy program. So just, again, thinking about your own activities and what the programs are trying to do is an important part of it.
So we got a couple last questions here. Lost where I am. If the government expects an employee who collected CERB and now gets retroactively paid, must pay back the CERB, is the employer liable if using the wage subsidy if the employee doesn't pay back the CERB? I think the answer to that's to no, but I don't think the employer is liable. I think that liability is on the employer. I don't know if Marty, if you've got a different thought on that.
Yeah, we're just starting to work through these issues now that the programs are sort of activated and working. And I think what ends up happening there is that there's nothing that, as long as the wage subsidy that you're in fact claiming is fine, then I think the wage subsidy sticks. But potentially what then happens is that, you've got your employee that's claimed CERB, and at the same time they've got income from employment, which they can't have. I mean, there's the de minimis $1,000. Okay, but if you blow through the $1,000 in that 4-week period, then the legislation looks at the employee all of a sudden as having made a claim and now they're not eligible. So I seem to think that that would be something you'd want to clearly articulate to your staff after understanding that more fully. That, like, look, you're getting this money, but definitely earmark some of this money for repaying of CERB if that's in fact the case, and just try to manage it as best as you can and help the staff do the right thing.
All right, I think being told we've got about 3 more minutes here, so we've got a few more questions. We'll try our best to get through these, but if we don't get to your question, feel free to reach out to Marty and myself afterwards. We're happy to answer any unanswered questions offline. So the next one here, if we get dividends, do we qualify for CERB? The answer to that would be yes, as long as you receive $5,000 of non-eligible dividend income. So, dividends paid from basically a company that's claiming the small business deduction. Yes, you will qualify for CERB. So that was something that was added to the rules a couple weeks after the program initially rolled out. Next question, if the government expects an employee who collected CERB and now gets, I think we might have just answered that one. If we apply for the wage subsidy starting March 15th, can employees pay back? I think we have answered that one, pay back the CERB to the government. I think you just answered that, did you not, Marty?
Yeah, that's right, yeah.
Yeah. Do we know if the Aviva pandemic insurance payouts are taxable? That's a good question.
Yeah, generally speaking, any receipt, the starting point that is taxable, and now you got to sort of find your way out of it. I would anticipate that it'll be taxable.
Next question: are AR collections, e.g., insurance payments for work that were done before closure, still considered income, even though we haven't been working? I would say no; those wouldn't be considered income. What they're looking at is income that pertains to the period that you're making or earnings that pertain to the period that you're making a claim from. So your NER collections pertain to income that was earned pre-pandemic. So you should be fine collecting your receivables. I think, Marty, you might have already touched on this one. Will the Aviva payout be considered income and disqualify me from the CERB? Sorry, it's a little bit different than the last one.
Yeah, so I mean, if I had to guess here, there's a dentist that doesn't have a professional corporation, but does have this as a sole proprietor, the insurance. So the insurance receipt, the receipt of the insurance by the sole proprietor would probably be self-employment income, and one of the conditions on the CERB is not having self-employment income. So Again, probably just go get some particular advice on that and just sort of see if you're out of CERB for one period. It's probably just one period, if anything. But I would sort of seek your own advice on that.
Right on. So I apologize. We do have to cut this off now. I know there's a couple last questions. So feel free to reach out to Marty and I. Just before we go, first of all, I just want to thank all the UBC alumni on the line for spending time with us today and listening to us. Greatly appreciated. And again, thank you to the Dental Alumni Association, Rosemary and Jane in particular, for pulling this event together. It's been a great partnership between MMP and the Alumni Association over the last number of years, and always great to work with you guys. So thank you very much, everyone, and enjoy your weekends and stay safe.
Thank you.